Hello, my name is Stu Wisson and welcome to financialspreadbet.com. In this video I'm going to be talking about what is technical analysis. Now, technical analysis is a method of analysing financial chart data that is represented in varying forms depending on preference and technique to allow a trader to gauge the market history and current activity to assess opportunity for trade entry, projected profit and exit. As an aside, there are two camps in analysis. There's technical and fundamental. Now, I'll be writing about fundamental analysis in another article. Now, despite the devotees of each forms of analysis, it is considered good practice at least to take some form of fundamental analysis as part of, say, a longer-term trading position. And the same is true for fundamental traders, to look at the technical charts to analyse the current markets. Now, when one hears the words technical analysis, it conjures up the image of something that is inherently technical and requiring an aptitude for finance, figures and accounting, to be able to understand business and so on. And as much as any form of that knowledge is useful, it's not critical to understand technical analysis. In fact, I'm going to go on a bit of a limb here and state this: technical analysis is not technical at all. Most of the technical aspects are done for you. What I would prefer to call technical analysis is in fact visual analysis, as the computer uses algorithms to present the information to you in particular ways, depending on preference and the method of analysis used. It is up to your ability and in your understanding of analysis to visually look at the chart and assess whether that stock, for instance, is worth trading on. Now, various overlays can be added to any chart to show given speed of growth or decline, to represent the amount traded and how quickly to gauge current upward, bullish or downward, bearish trends. Just as a quick aside, there will soon be a complete free training course on both spread betting, but more so the use of technical analysis and how to apply that. Now, this is going to be a complete and full course to enable you to begin trading with confidence, and what's more, it will be completely free. It will be completely free. You can, if you're seeing this on YouTube, you can go to financialspreadbet.com, where you can pre-register. It's absolutely free. Or if you're already on the website, all you have to do is, if we just scroll up here, there's an early bird access form where you enter your name, first name, last name and email, and we'll let you know as soon as it becomes available. So back to the article. Okay, back to the story. Analysis is neither technical nor difficult, but does require skill and takes a while to learn. Now, one of the key mistakes that a novice using technical analysis for the first time is that some believe that technical analysis has the ability to predict future price movements. Now, this is impossible. No matter how powerful computers become, how clever the software that is written for them, this is simply not possible. What technical analysis does give you is the ability to use well-known methods. This could be anything from forms of pattern recognition as applied with Japanese candlestick charts, or open, high, low, close charts that, based on many years of analysis, certain patterns that are usually very loose in interpretation can sometimes predict, some suggest possibilities for movement in a given direction. There are also what are known additions called indicators, now that represent an aspect or a combination of data and show this in a new way, within boundaries which can suggest positions where the market may begin to slow down or speed up. Further, there are overlaying aspects you can add to a chart, such as the widely used moving average, or which are lagging indicator, taking an average of the closing price of the market at a set number of days. Say, for instance, a 20-day moving average will plot the last 20 days closing prices on the chart as a line. Now, a combination of these moving averages is a very common indicator to show possibilities of where the market is changing trend, for example. Talking of trends, trends are by far the most common and possibly the key aspect of any form of analysis that you should first apply. In fact, trading is littered with sayings that here I will present you with by far the most common, and one of which you shouldn't ignore. In fact, I can assure you that I'll be saying this many times over in the training course later. Now the saying is, let your trend be your friend. Now, essentially this means if the trend, the overall movement of the market in one direction or another, up, bullish trend, down, bearish trend, is going up, for instance, and has been overall for weeks or months, it would be foolish to trade in the opposite direction, certainly if you're looking to take a longer time scale position of days or weeks. There are many tools, techniques, methods and practices in technical analysis. In fact, in 2009 I wrote a complete training course in analysis called the Master's Certificate in Technical Analysis. Now I am in the process of completely rewriting that from the ground up to make it easier to understand, to make it more open, to breathe in new methods considered a lot has changed in the markets over the last few years and more so. I'm going to give you this course that was marketed at a silly amount at the time, absolutely free. Cool, huh? So trust me, this won't be some fluff that you'll see on other sites. Just make sure you look out for it. Oh, and just a quick word. I am British, so some of my spelling may be somewhat odd to my American cousins, such as analyzing with an S rather than a Z, or a Z rather than the American spelling of analyzing with a Z or a Z. You wouldn't believe over the years that I've been writing about analysis. After all, this is what I'm known for writing about. How many people write to me over the years, or have written to me over the years, stating that I am spelling certain words incorrectly. Now, I just had to get that out of the way, so just so we're all on the same page. So analysis then allows a trader to take information from the trading of a particular item and use the historic data to be presented in different forms that allow for a method of analysis to be undertaken. A key point I want to point out here, which basically reinforces what I was saying earlier about analysis, not being able to predict the future, is that analysis only uses historical data and presents that data in a particular way. A result of this, 99% of all indicators and methods are only showing you what has already happened. Let me repeat that, and I may in fact put that in large letters. Indicators only show you what has already happened. Algorithms are applied to the data to represent it in a particular way, which depending on the algorithm is read in a particular way and represents either a change in momentum, the speed of the growth or decline of the chart, or provides some form of average lineage representation, all of which are read in particular unique ways. Now, for just one article, it's impossible for me to give you a full idea of what analysis is really about. Certainly, there is no chance for teaching you about analysis in just this one article. Remember to look out for the free course. However, if you need to take anything from this article, it's that technical analysis is not in fact technical, it's more visual. That all technical analysis can do is represent historical data in a particular way that makes it easier to understand what may or may not be happening with the market, and through a great deal of understanding for the method of analysis that you are using, and there are plenty, many of which we will cover, I will promise you, they allow you to judge price movements, entries, exits and potential profits. This is all analysis can give you. It is not a crystal ball that allows you to see into the future.